This is Don DeBartolo, a senior commodity broker with Daniels Trading in Chicago. I'm also the editor of the Trade Spotlight Advisory Service. Trade Spotlight is broken into three segments. You have the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This video is Beyond the Spotlight, part of the Trade Spotlight package. It's a video that will spotlight 2 or 3 markets that may become trading opportunities for the week ahead. The week in question is Monday, starting with Monday, May 27th, 2019. That is Memorial Day. The markets are partially closed, just some electronic sessions that are open shortened hours. So this video will be posted on Tuesday, May 28th. Before we look at the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. This is what the Trade Spotlight email service looks like. Sent directly to your inbox. You'll have the timestamp so you know when the trade recommendation is sent out, a write-up on the thinking and the data behind the trade, a link to view the chart, the precise entry order, and stop loss and target orders, so you have all the information available to make a decision. This is the future segment, so you have stop and target. Same with the future spread. If it's an option contract, it may just be the risk reward profile on the trade recommendation, and then any other pertinent information. Okay, let's take a look at our first chart. This is the June 2019 Japanese yen, and if you follow the Beyond the Spotlight video every week, this is the chart from last week where I mentioned the market potentially pulling back into this level here and then waiting for a hook back up to the upside. So now I'm going to take you to this week's chart and a little bit bigger picture here, but you can see the market did indeed pull back to this level and now is heading up towards this upper trend line. Obviously it would have been great to buy the contract up here and write it up, but the momentum has now hooked to the upside, and you're seeing the MACD, a trend indicator, hooking up as well. So just need to be patient. Now it's time to go long. So this is a trade that you may see early next week through the Trade Spotlight Advisory Service. You can do there might be a break of this trend line or a break of this pivot point high right here. That pivot point high that I have highlighted, let me give you the price point on that. That is looks like the May 13th high at 91.98. So again, either a break of that trend line or a break of that high. This trend line right here, today's Friday session high was 91.67, so a break above that level. So either or will be a long entry opportunity and a break. Stop loss could go down at this pivot point low, the number 3 point of a mid-level 1, 2, 3 formation, but that's a lot of risk. So this might have to be trailed up a little bit, maybe halfway of this big bar trading range just to minimize the risk. There's also a 200-day moving average at 91.09. So that's another potential level for a stop loss. Upside target could be this 12-month contract high, the number 1 point on the trend line. That high is 94.99.5 from January 3rd. Or you can just do these levels in here. I drew this line. This may end up being where I decide the target may be just above that 94 even price level. Taking a look at the next chart, this is the August 2019 heating oil. And you can see I marked off 3 levels with rectangles. What we have here is a market that's trading sideways within these levels. So you had a good about 3 weeks of trading here, starting with the middle of February the 14th, trading to March 28th. So it's actually a little bit longer than 3 weeks, almost a month and a half. Then you have this level in here that begins with the trade date of April 9th through May 22nd. So again, there almost a month and a half. And now we're back down to this level. So I anticipate the market to trade sideways here. Especially there's a lot of conflicting data, fundamental and technical information. So this market can remain choppy. Right now you see the MACD is down, and that's not surprising after the big sell-off. There was a big, 1,000-point almost sell-off on from Thursday, May 23rd, so that kicked the momentum down and the trend down as well. You've got 3 moving averages in here, the 20-day, 50-day, and 200-day moving average that are all around this level. A Fibonacci retracement of this big sell-off that began with that trading session high, this high here on October 3rd at 242.62, and ended up trading all the way down here to that 12-month contract low of 164.32. 50% Fibonacci retracement is 203.35, just below where we're trading now after that big sell-off. But it was trading along that 50-day moving at, or that 50% Fibonacci retracement. So again, looking for sideways trading action. There's a lot of space here on the chart. Why I brought this up is I'm looking for an opportunity to sell puts, watching for this market to trade sideways and then follow its seasonal tendency to head higher as we get into later in the summer months. So I'd be looking for selling puts below this 165 price level. There also may be an opportunity to sell calls on the other side of this 12-month contract high, in case the seasonal never comes to fruition. So while we're in this middle of this range, though, we might take on both sides of the market and track and see which one we want to continue to hold. But that may come out through the Trade Spotlight Options newsletter. And the final chart today is the August 2019 Lean Hogs. Lean Hogs on Friday, May 24th, was limit down. It was down 300 points from its opening price. It could not trade any lower, than the previous closing price. So it could not trade any lower in the session. So I'm looking for follow through to the downside. Market reopens Tuesday, May 28th at 8:30 a.m. Central Time. So gotta have the orders working before then or quickly, because there's the potential for a continuation of that downside move since it was lock limit on Friday, May 24th. But a break of these lows right here. So this one that I circled off, 89.45 from May 7th, and the next one is 84.57.5 from May 14th. So a break of those lows triggers MET, short entry, momentum entry technique. Short entry, and you see there is momentum. This is the stochastic indicator. The trend is rather flat, but it is angling bearish, and you can see that from a sideways trading market, bouncing in between a range between about 96, 97, and 89, 90. So looking for a break of these levels right away Tuesday morning, and I'll pull back down to this 100% level, this Fibonacci retracement, this 100% level, these lows down in here at 78.35. I might put my target right in front at 80. That's why I drew a green line off here. That would be the potential downside target. Stop losses, if you go above Friday session high, that's a lot of risk. You're looking at 300 points or more. So the stop may have to go down above some of these recent highs, or this 50% Fibonacci retracement at 90.67.5. If you have any questions on the charts, the Trade Spotlight Advisory, or just the markets in general, feel free to contact me directly. This is my local, cell, or toll-free numbers. You can also email tradespotlight@danielstrading.com anytime. If you're not a subscriber to the Trade Spotlight, I encourage you to do so. You can do so on a trial basis for 90 days to see what we're doing, see if you like what we're doing. Then you can follow along. It's free to Daniel's Trading clients and clients of mine. Otherwise, after that, it's $99 a quarter. Just go to the Daniel's Trading website, click on the Advisories tab at the top of the page, and then under Technical Analysis, you'll find the Trade Spotlight button where you can subscribe, you can view samples, learn more information. Thank you for taking the time to watch this video, and happy trading.